As opening day approaches, Major League Baseball remains embroiled in a lockout, with no end in sight. The players remain steadfast that they deserve a bigger cut of baseball's ever-increasing revenues, while the league's owners, most of whom are billionaires, are just as adamant that they shouldn't. Ultimately, the owners aren't prepared to make the serious economic concessions that would get this lockout moving, because according to Commissioner Rob Manfred, owning an MLB team isn't nearly as lucrative an investment as people think. Recently, Manfred even claimed that the return on investment for MLB owners is less than what you'd get in the stock market and carries more risk.
No, that doesn't sound right.
Is that true though, or was Manfred simply blowing smoke to gain some leverage in negotiations? Let's break down the numbers and find out. Sit back, relax, and take this in. Before we continue with today's episode, I want to remind everyone watching to subscribe to our channel if you haven't already, and help us creep closer to that 100,000 mark. From the start of 2002 through the first trading day of 2022, the S&P 500, a commonly cited stock market index that tracks 500 of the largest companies listed on US stock markets, has increased in value by 309%. That's some serious growth, but it's also peanuts compared to what MLB's owners have seen over the last 2 decades. In roughly the same period, the average MLB franchise value has increased 566%, from $286 million in 2002 to more than $1.9 billion in 2021, according to Forbes team valuation data. Owning an MLB team has provided better returns in the last 20 years than most market indexes, like the Dow Jones and Russell 2000. Ounce per ounce, MLB teams have proven more valuable than literal gold, which has increased by 536% in the same 20-year period. Even the lowly Miami Marlins, the least valuable franchise in the league, were an incredible investment for Jeffrey Loria, who purchased them in 2002 for $158 million and then sold them in 2017 for $1.2 billion. That's a 659% return.
Wow, that's a lot of money.
Loria, by the way, claimed he made no profit from the sale. To beat the value of owning an MLB team over the last 2 decades, you'd have to have been an unbelievably good stock picker, invested completely in the tech-heavy NASDAQ, or gotten in early on Bitcoin. Meanwhile, team ownership has also become far less risky in this era of guaranteed media rights, national TV contracts, and revenue sharing that props up smaller market teams. Private equity poured roughly $2 billion into professional sports ownership last year, because there really is no better investment right now. Teams are rarely sold for less than they were purchased, and MLB has no competition in the professional baseball industry. It's a legal monopoly. And unlike stocks, which don't produce much cash flow for shareholders unless they pay a healthy dividend, owning an MLB franchise also means a ton of revenue between the time you purchase a team and eventually sell it for way more. MLB teams collectively generated nearly $11 billion in revenues in 2019, their 17th consecutive season of record growth. Now that mammoth figure doesn't account for expenses, and in fairness to Manfred, a stockholder wouldn't have to worry about such expenditures. How much do these costs eat into team revenues? Are teams actually profitable? Most teams are privately owned and don't open their books, so it's impossible to answer those questions. But the World Series champion Atlanta Braves could give us some insight. The Braves are the only US-based team owned by a publicly traded company, Liberty Media. In their most recent earnings report for the 3rd quarter of 2021, which included 34 home games, the Braves reported baseball revenues of $234 million and operating income or net profit of $30 million.
It's like printing my own money.
Still though, investing is about capital appreciation, not short-term cash flow. And ultimately, whether you're on the side of the players in this fight, the owners, or have remained neutral in your desire to just get baseball back in time for opening day, it's clear that it's been extremely lucrative to be the owner of an MLB team over the last 20 years, and that generally it's been better than owning many other types of assets. So what do you think? Is there any validity to Manfred's claims, or was it just a strategic move to help the owner's case in the ongoing CBA negotiations? Let us know in the comments, and don't forget to like and subscribe.